Hey everybody, what's up? How's it going? My name is Robin and welcome to today's video. And in today's video, I'm going to be sharing with you guys 3 undervalued Canadian stocks that are worth looking at for the month of November 2020. So if you guys are fans of the channel, you know I like to do these videos like once on a monthly basis kind of thing where I share with you guys 3 stocks to look into following for the next month. So in this video, I really went out of the way to kind of pick some new stocks that I haven't talked about before, but I also wanted to make sure I picked some solid Canadian stocks. And the cool thing about these videos is I learned a lot about these stocks myself when I do these videos, so it's a nice way for me to kind of research, and I can share that research with you guys so you guys can find some nice solid Canadian stocks. And I promise you guys, in this video I got a lot of new stocks that I haven't talked about on this channel that much before, and these new stocks are really good solid Canadian stocks, so I think you guys are going to really enjoy them. And like always guys, if you guys enjoyed this video, please be sure to give it a big thumbs up and remember to subscribe to the channel if you guys want to see more Canadian based dividend investing content. So let's jump into the video and let's start with my number 1 stock to buy for November 2020. Alright, so the first stock on this list is going to be none other than Canadian National Railway, or CN stock. Alright guys, so you guys probably know what CN or Canadian National Railway stock is. It's a pretty popular company based out of Canada, a freight railway headquartered in Montreal, Quebec that serves Canada and the Midwestern and Southern United States. And CN, of course, is Canada's largest railway, both in terms of revenue and physical size of its rail network. Spans all the way from Nova Scotia to the Pacific coast of British Columbia and has over 20,400 route miles of track. CN is a public company with 24,000 employees and has a market cap of approximately 90 billion Canadian. And I managed to pull this cool little map here, as you guys can see, that actually shows you where CN actually has their operations across Canada and, of course, the southern US. So one of the big things about CN stock is they actually returned over 415% and total return over the past 10 years. That's an average of 41.5% of a return per year for CN stock. That is a crazy return. Now, obviously, nobody could really have guessed that would have happened, and obviously, that number isn't represented by every single year. But if we took the average year and we divided it by 10, that gives us like that average yearly return. So 41% per year is pretty significant, and that would lead to some huge gains if you invested into CN stock. And here's a nice little representation of that 10-year growth of CN stock with a nice little graph here on Google Finance. So as you guys can see here, CN stock was trading at about $30 in the beginning of 2010, and now it's currently trading at about $141. So that is just crazy growth in the past 10 years for CN stock. So of course, when the pandemic happened earlier this year, the economy as a whole basically came to a standstill. But as you guys can see here, since the economy has been kind of reopening, CN stock has just been growing. In the past 6 months, CN stock has grown all the way to be about $100 or even $97 Canadian, all the way to where it is now of $146. That's a lot of growth in the past 6 months, and I continue to believe that as long as the economy continues to grow, CN National Railway will grow with the economy. CN delivers freight to the Atlantic, the Pacific, and even the Gulf of Mexico. When it comes to serving the economy, and specifically the Canadian economy, CN stock really is the backbone here. So as long as the economy is growing, CN stock is definitely going to grow with the economy. And that's really why I think it's such a good stock. And I really believe that's why the stock has continued to do well for the past 10 years. And especially over the past 6 months, it's continued to grow as the economy is reopening. Another nice feature about CN stock is they have a really nice diversified revenue stream. CN stock has over 9 cargo categories that they ship across Canada and the US, and the number 1 cargo category that makes them the most money is chemical based. At the time of doing this video, CN stock currently pays an annual dividend of $2.26 Canadian. It's also very important to point out that CN stock actually did increase their dividend for this year in 2020 by 6 cents at the start of the year. And it's also important to point out that over the past 15 years, CN stock has consistently and consecutively increase their dividend on a yearly basis. CN stock currently has a payout ratio of around 44.78% over the past 12 months and 35% based on this year's estimate. And this basically shows us that CN stock has a lot of room for growth with their dividends. And if anything bad happens with the company over the next little while, they can withstand the blow because they have an excellent payout ratio for their dividends. And although CN stock is priced pretty highly right now, I still think it's a really solid buy, and I still think there's tons of growth for CN stock in the future. Alright guys, so the second stock on this list that we're going to be talking about today is going to be Algonquin Power and Utilities Corp. Now this is a stock I've been meaning to talk a lot about on this channel over the past little while. I just haven't gotten around to it, but I do think Algonquin Power Utilities Corp is one of the best utility-based stocks coming out of Canada, and you'll see why as we start to talk about more in this video. So just in case you guys aren't familiar with Algonquin Power and Utilities Corp, it is a Canadian renewable energy and utility company that functions basically across Canada, but mostly in Canada. They actively invest in hydroelectric, wind, and solar power facilities, and they also utility-based, having water, natural gas, and electricity as well. Now, some of the more popular power companies and utilities companies in Canada would be like a Fortis stock or Enbridge, but I think Algonquin Power and Utilities is one of those stocks that's definitely coming up there, and I think this stock might even eventually at some point overcome some of those big utility companies that we all know in Canada. So this is definitely a stock to look out for in the future, and I think it is one of those top players. So the biggest reason why I think Algonquin Power Utilities is one of the best Canadian stocks is because they've actually outperformed a lot of growth stocks on the TSX over the past 10 years. If you combine the total return plus the dividends over the past 10 years, and if you would have invested into Algonquin Power and Utilities, you would have gotten a huge return over the past 10 years, as you guys can see in the following graph. Algonquin Power and Utility stock currently offers a dividend yield of about 4%, which makes this stock a really good dividend stock to add to your dividend-based portfolio. But the nice thing about this stock, it also has a lot of room for stock appreciation as well. As you guys can see over the past 10 years or so, the value of the stock has went up quite a bit, just like CN stock. So the nice thing about this stock is not only is it a good dividend-based stock, it also has a lot of stock appreciation, and I think it brings the best of both worlds, and these are the best types of dividend stocks that I like to see. After doing the research for this company, I'm definitely going to be adding this stock into my dividend-based portfolio at some point in time. And if we look at the past 6 months, we can see that since the pandemic, Algonquin stock has actually recovered quite well, and it's still on its way to growing up, and it's grown over 42% since its biggest dip in the beginning of mid-March 2020. Another nice thing I like to see about Algonquin Power and Utility stock is that their earnings are steadily increasing as well. If we take a little peek here on Yahoo Finance, in 2016, we can see that the earnings are about $92 million, and you can just see that it just keeps increasing over time up to 2019, where it jumped up to $53 million. That's $1.62 billion in revenue. That is crazy earnings, and that's a lot of growth with the stock. So the stock definitely has a lot of potential going into the end of 2020 and 2021 to also increase in earnings. So I think it's a really solid buy right now. Overall, I think Algonquin Power and Utilities is one of those Canadian utility stocks that's right up there with the Enbridge and the Fortis type stocks. So I think this is a solid stock. I think it's one of the bigger players that are kind of coming up, and I think this is one of the best utility stocks to invest into going into the future. Alright guys, so the third and final stock that we're going to be talking about today is Intact Financial. So when I made this video, Intact Financial is actually one of those stocks that I actually don't know a heck of a lot about. So I did a little bit of research, and here's a brief little introductory about this stock that has a lot of promising potential. So Intact Financial is the largest provider of property and casualty insurance in Canada. The company has over 13,000 employees and insures more than 5 million individuals and businesses through its insurance subsidiaries. And one of the big reasons why I've added Intact to this list is because of the fact that over the past 10 years, Intact has returned over 300%, so that's a lot of growth, just like all the other stocks I mentioned in this video. You'll notice that over the past 10 years, these stocks have done quite well, and this is why I'm focusing on them for investing into the future, because chances are they also will do well going forward through the pandemic. Intact Financial currently has an annual dividend of $3.18 Canadian, which is pretty high, and has a dividend yield of 2.21%. So the nice thing about Intact Financial is that they've actually been on a large dividend increasing streak since they first went public in 2005. Since 2005, Intact Financial has been increasing their dividend on a yearly basis. So it's nice to see that they're growing, and with a 2.21% yield with 60% payout ratio, looks like their finances are pretty good for paying their dividends. It looks like we should see some nice good increases come in the next little while. Intact Financial is quite an expensive stock, trading at $143 Canadian on the TSX. You can see the growth over the past 10 years here. So in 2010, Intact was trading at roughly around $40 Canadian. Fast forward 10 years, it's now trading about $140 Canadian. So once again, this is a stock that has really, really good growth with a dividend yield that is slowly starting to increase as well. So also nice dividend growth over that exact same time period as well. And although this isn't a stock that I know too much about, it's definitely something I'm going to be putting on my watch list, and I might think about adding this into my dividend-based portfolio. I'm just going to do a little bit more research to see if the growth and whatnot looks pretty good, but I think it's pretty solid, and looking at its finances and whatnot, and its payout ratios and all that kind of stuff, I definitely think this is a good dividend stock that's going to keep growing, keep increasing, and also have that nice stock appreciation going into the future as well. So I think Intact Financial is definitely something to add to your watch list if you want a nice, good, solid insurance insurance, finance-based Canadian stock to add inside your portfolio. Alright guys, I hope you guys enjoyed this video, so please let me know what you guys think in the comments section of this video. If you guys enjoyed the video, please give it a big thumbs up, and feel free to let me know what stocks that you guys are looking into for the month of November. So thanks for watching guys, hope you guys enjoyed this video, and I'll see you guys later.